This is MacroVoices with hedge fund manager Eric Townsend, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
Let's go to our post-game chart deck now. Listeners, you'll find the download link in your Research Roundup email. If you don't have a Research Roundup email, just go to our homepage, macrovoices.com, click the red button that says Looking for the Downloads. Patrick, what is your thinking on these equity markets?
All right, Eric, let's start on page 2. Here we have the S&P 500. I just really want to highlight that the trend really has now broken out to the upside. And it wasn't just a short-term breakout for one day and then pops back down below, but this is a legit breakout. We talked about in our chart decks throughout late September and early October asking whether this was just going to be a shallow market correction. And it really has proven to be the case now. Really what will be interesting is to see whether or not all little corrections and consolidations can hold decisively at or above 4,500. What we're going to see under those circumstances that the bulls will prove that they're decisively in control of this, and that really would open the window for easily another 3 to 5% upside potential in these markets. It'll be really interesting to see whether we have a year-end rally off of that. I mean, in order for these charts to start even beginning to look bearish, it would take a decisive breakdown day that starts wiping out 100 or 200 S&P points to the downside just to do the technical damage to start making these markets look a little bit bearish. And therefore, really we have to give the kudos to the bulls here and let us see where they're willing to take this. When we go to page 3, I just once again wanted to highlight the volatility index. We still have not broken to lower lows on volatility. And this is interesting because throughout this entire bull advance since the COVID crash, volatility's lows have generally been held to about the 15 handle, and in the prior to the COVID period, the VIX was as low as 10 to 12. We are at a sustained higher volatility premium, and it's interesting that we're seeing that. The question really is there a new breakdown in volatility coming where we can go back down to those lows? And that's something that's on my mind. So far, the lows from July continue to hold the bottom end of that range.
Patrick, the next few charts, you're looking at the euro and a few commodities. What's going on here?
Eric, I want to start off with that euro. The ECB just came out with their press conference and a very strong reaction to the euro. This is what caused that dollar index or drove that dollar index down 50 cents on when we look at the Dixie. At this stage, this is a really important moment. This entire euro consolidation, euro has been in a very clear decline from June all the way through October, and we really are seeing just the beginning of these bouncing markets. What will be interesting to see is whether or not the euro legitimately is putting in a bottom and changing trend, or whether this is just a false start and euro weakness prevails. The dollar has been divergent from a lot of the different natural intermarket correlations that we're seeing in commodities and other assets. And so if the euro turns here, it would actually start to bring the entire intermarkets in line. And this is probably one of the more important charts to watch here in the coming week to see whether that becomes the unfolding reality. Touching on to the crude oil chart that you were talking about earlier, there's that 2-3 day market correction that we've just been in. And it's interesting because, typically a solid $5 pullback has more or less been a pretty good short-term pullback for crude. It's a big question as to whether this is going to be a bigger or deeper correction or whether this is it. If this is a shallow flagging formation like we saw in the middle of October, then the bulls should get this back above 84 in a matter of just 2-3 trading sessions. I think that's what's on my mind to see whether or not the bulls can actually fuel a new launch towards $90 if they can turn it here. The other chart that I wanted to just highlight in the commodity space was copper. And copper had been consolidating from May all the way through October in that downwards correction after what was a pretty distinctly pronounced bull market run through most of 2020 into the early part of 2021. After this consolidation, we had a really legitimate breakout on the upside of copper, retesting the May highs. With this pullback here, this is a really important moment to find out whether the bulls are willing to buy dips. And it'll be really interesting to see whether copper is actually turns here in price and whether this becomes a buy point. If it does, that certainly would continue to support the idea that there might be more upside on copper.
Patrick, starting at page 7, you have the 2-year yields from a number of countries. What's on your mind? How come at different countries?
Yeah, Eric, what an interesting price action we're seeing in the bond markets. We were touching on that 10-year Treasury yield earlier, even the 30-year Treasury yield. We see actually yields backing off and things pretty quiet. But the higher inflation and the central bank tightening has really created a very strong move on the short end of the curve, particularly in the 2-year yields. And the interesting part is that this isn't a U.S.-specific story. What we continue to see is that the 2-year yields around the world are all skyrocketing higher. So while we see here that the 2-year yield has increased in the U.S. has increased from about 25 basis points to over 50 basis points in a span of just a month. But when we go and look at page 8 and look at the Canadian yield, after a very hawkish Bank of Canada statement, yields have rocketed from 40 basis points to over close to 110 basis points on the upside. When you go to Australian 2-year government bond yields, just a rocket of a 2-day move where we saw the yields go from 15 basis points to 45 basis points. You saw even in the German yields, even though they're still very negative, we're breaking now out of a 1-year range. And so we're seeing these short-term yields right across the board rising, but it's not the whole yield curve is rising, and that's the most interesting part. And I think to best illustrate this is to look at what's happening in the 5s, 30s yield curve on U.S. Treasury, and you can continue to see the flattening is underway. And this is something that I think is at least surprised me a little bit. While I didn't necessarily think we had to have a huge steepener in play, but if you would imagine that if secular inflation was real, that the long-term government bonds would start to actually price long-term inflation expectations higher, and that should at least have kept this relatively flat. And what we continue to see is that the belly of the curve continues to move so aggressively, and yet those long bonds are not responding, and that's continuing to create this flattener. Now, while the Fed and central banks around the world are more or less pinning the front of the curve, we are starting to see a lot of pressure to raise interest rates on it. This is a really interesting moment, and the way it's materializing the bond markets is something to continue to watch. It's something that I don't hear too many people talking about, and it really just is such a big move, at least on the shorter dated notes.
And listeners, you can get Patrick's chart decks not just once a week, but every single day with a free trial of Big Picture Trading. The information is on page 13 of the slide deck, or you can just go to bigpicturetrading.com.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from bigpicturetrading.com, the Internet's premier source of online education for traders. Please visit bigpicturetrading.com for more information. Please register your free account at macrovoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at macrovoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit MacroVoices.com.